G'day everyone, welcome back to Pete's Investing, April 4th, 2023. This is the spot silver price update. Again, from a high level, you can see here on the daily, the 4 hourly and the hourly, we're all in an uptrend on the CCI 1500 with a 400 moving average. That's our key indicator. And now that closely aligns with the moving average 200 of the price chart. But this one's a more reliable indicator for trading purposes, and I'll explain more as we go. So as you can see here, we're in an uptrend, and I'll drill down on the daily first. Now I've drawn these 4 lines, the support and resistance lines, these horizontal ones. The first one's at 24.63, the red one, and the blue support line is at 19.91. And the price that's in that range at the moment. It's been there for some time. Now I've also drawn these diagonal descending and ascending trend lines, and they're touching those tops and bottoms, as you can see there as we zoom out. Now it's currently respecting that downsloping diagonal trend line. It's bounced off that and to the downside in the last day or two. So that's something to be mindful of. In other words, it may come down further into this range on the daily chart. So just be aware of that, even though we're in an uptrend. And we'll go to the 4 hourly and the hourly next to give us a bit more clarity. On the 4 hour time chart, as you can see there, it's still in an uptrend, but again, it's bouncing off that diagonal descending trend line. And you can see this since our last update. And I've also drawn this dotted line, and that could become our next key resistance area, and that'll replace this hard red line up here. So in the coming hours, I'll be changing probably that. If that persists to go to the downside, I'll move that hard red line down to this dotted line area. So again, I did also draw this Fibonacci extension, and that went as far as the 100% level. But you'll notice the hard red line up there is at the 123%, and that's a level. If it breaks above this dotted line, that'll become incomplete, and that will then advance towards this hard red line at 24.63 will be our next resistance area. But as I said, it's looking like it may well come back down in this range within this wedge. On the hourly chart, again, you can see here I've drawn a range between that bottom and that high, and a Fibonacci retracement, and it's been sticking towards this ascending diagonal line and now bouncing off this higher descending line. If I zoom out, you can see that descending line there. So it's sort of bouncing down from there, as I said, and we may see it, and it hasn't reached yet, but we may see it come down as far as a 23% level at 23.17. And if it breaks out, the next level support will be the 38% and then 50% Fibonacci. The key area to look out for is the 50% and 61% Fibonacci area. That's at 22.06 and 21.56. If it breaks below those, then we're going to see a further decline and potentially some shorting, not shorting, but at least a bearish outlook potentially in the coming days and weeks. But at the moment, it's looking like a pretty strong uptrend on all 4 timelines. But just be aware of these 2 areas of resistance at first level here at the dotted area, and secondary at the level up there. Now, in terms of some trading ideas, I've got these fractals in here, and I'm going to zoom into these in a minute. So whenever you see potentially, especially if it breaks a new upward momentum like this, I'll just zoom out to the 3 timelines again. Whenever 3 timelines are aligned, the hourly, the 4 hourly, and the daily, whenever they're all in an uptrend. So for example, especially back here on the early hours of the hourly chart, you could have taken some potential trades. And one trading idea is using fractals in alignment with the CCI. So when the CCI is in an uptrend, okay, so remember, we always trade with a trend. We don't go short in any of these positions. We always trade with a trend. So, and what I've got down here is a couple of little spikes, upward pointing spikes, which show where the candle is broken up through the fractals. The fractals are these red lines. That's the upper level. So when you can see there, when the candle is broken up through the fractals, that's what that signifies. That's where you go long ideally. You want to avoid going long in these areas. So you want to go long when it breaks above the fractal. So that could have been one entry, and your target would have been, in this case, I've got a 1% target on the hourly, and that would have been hit on this count on the next hour. That would have been hit. The next entry would have been at that level there, broke above the fractal, and your target would have been at that blue line there, and that would have been closed out on that bar there a few hours later, and so on. That's just a trading idea for you to consider. And there's more trading ideas in my strategy playlist. Please refer to that for further ideas. Again, we don't use stop losses, we use the average down approach, and I've been profitable using the average down approach since. So don't get more updates and strategy ideas. Reference the links in the description below. Support us on Patreon, links in the description also. Subscribe and like the channel, and I'll see you in the next video.